That'll probably be the first thing these oaks hear on the morning call, Rod. Right. Good morning, everyone. Let's get going. Right. Yeah, last night's session in the States actually a slow drift higher, as we expected. I think we talked about that in depth yesterday morning. We fully expected a drift up in the morning set, or through the long weekend, and possibly even through the end of the year. You can see that we maybe got a little bit of a start to that yesterday. We actually had some uh, less than stellar news out of the States for the first time in a long time. We had a couple pieces. If I'm not mistaken, it was the durable goods orders. The durable goods orders are fine, but transportation, which is when you're taking the airline orders and that kind of stuff, which are really volatile and can be subject to huge effects on durable goods. Taking that out, it wasn't so great. So and we also had jobless claims. Which bounced up to above 300,000, which is about 25,000 worse than expected, if I'm not mistaken. So, first, I mean, it's nothing to be too scared of, but the first sort of things, on the radar, yeah, yeah. If that we've had in a while in terms of slightly softer data. Probably not enough to get markets alarmed, obviously, as you could see out of the market. The other thing is we had John Deere that came out yesterday with earnings. Earnings were much better than expected, but still lower than last year's earnings. And they traded down on that news simply because the guidance going forward still wasn't great. They're saying that the earnings are going to be lower again this for 2015, and they don't really see a turn anytime soon. They also had some really negative things to say about commodities, saying expect all commodities except for corn next year to be lower. It's a great global bellwether for obviously agriculture and industrial bellwether, and a good barometer for commodity prices. So when they say that they expect all commodity prices to be lower next year, then I think that weighs on the market. We have seen all the physical commodities across the board lower this morning as we come into the session. I fully expect that to weigh a little bit on our market. We've had these big bounces out of some of the commodity stocks, diversified miners, and those sort of things on the back of Chinese interest rate cuts. But really, what's one interest rate cut going to do for commodity prices? So I think some of the shorts that were caught out there, and we may look to start to see that reverse, especially as we see some of these commodities trekking to new lows. We got oil, I think, at a fresh low. We've got copper. If that's not a fresh low, for the last couple months, it's close. Yeah. So really starting to move that way. We continue to see iron ore under pressure, etc. All right, if we look overnight in Asia, we had Shanghai that traded pretty solidly, but Nikkei and Hang Seng were down on the session. Aussie pretty much flat. We did have some of the mining stocks that were a bit heavy in Oz. Not a whole hell of a lot going on over there. We've seen a bit of a stabilization in the U.S. dollar yen, and also the just the currency basket in general versus the dollar. It seems to have started to stabilize. It kind of, for the time being, it looks like the dollar has kind of done what it's going to do, and so yeah, I think that we will have to play it accordingly. All right. Moving into our chart of interest, going into our theme of energy prices, commodities, that sort of thing. You can see there crude oil as well as the the entire energy sector, and the energy sector there up top. I think there's a couple things that are going into this. Obviously, oil is dragging everything down. There are also alternatives are starting to make their way to the forefront here a little bit, and this has started to drag down things like the utility sector and that sort of thing as well. So across the board, commodity prices are probably these lower commodity prices. We've talked about this a couple weeks ago. Say it again. Most likely they're going to be even lower, and it's going to be longer. I mean, this is a long-term move. This is not a short-term correction. This is going to be here to stay. So just play it accordingly. Don't get caught in there trying to pick bottoms in these stocks. All right, no corporate action to report today. In market data, we've got Spain with GDP at 10. We've got the German unemployment change and unemployment rate at 10:55. Then we've got local PPI numbers 11:30. We've got consumer confidence out of the Eurozone at noon, and we've got German consumer confidence and CPI numbers later this afternoon. So not a whole hell of a lot that's probably going to move markets, with any sort of intensity. So I think you can kind of ignore that. Remember, today's Thanksgiving in the States. It's going to be a hell of a slow there. There's going to be a hell of a slow here because the market's closed there, and then tomorrow's a half day as well. So obviously the U.S. is driving, drives global markets. This morning we could see, a bit of a drift, to say the least. So just be careful out there. Size your positions accordingly. Maybe play a little bit smaller today, and be a little bit more picky. All right, let's get into the maps. I don't have a whole heck of a lot in to show in terms of charts this morning, simply because just didn't have big volatility, not a lot of changes from yesterday. One of the things I wanted to just have a look at here is Cecil, which is just continuing to drop levels. We continue to get these points where we take out lows and then start to head a little, break down to that next sort of level. I just wanted to point out today, we did get down there and test it yesterday. If we get below 507, can hold below 507, I think there's no reason why we won't see that 500 level tested. The way things sit right now, with oil taking out new fresh lows, with the rand as strong as it is, our futures, slightly lower at the moment. I don't see any reason why this thing doesn't even get down there today. So watch for Cecil to potentially trade to $500 today. The next one that I'm going to look at here is Gold Fields. And Gold Fields, I'll look at this at two things. Okay, so just looking here, the gold price hasn't really performed, and we've been failing a lot at the 1200 Rand level. So you can see here, we've tested this level a lot. This is around 49, if I'm not mistaken. It's right at 49. Yeah, I call it 48.90. Yeah. So you can see that we touched the top there several times over this last maybe week's worth of trading, and then we finally kind of broken out. Last day and a half we've traded above $49 and consolidating a little bit there, potentially for a break higher. If you look at on the year chart, we can shorten it up a little bit here. You can see we've actually broken out of a bit of a little wedge here, and we've just popped out the top of that. I think we could even trade up to the highs here. Technically, I think we got to at least test it, which is at 51.5. So just be careful. I know the gold prices is off slightly this morning. I personally think that this is. Let's just have a quick look at the spot gold price. We know how big this $1,200 level is. So if we draw this thing right at $1,200, right, $1,200 and 1180 are two major levels. Let's zoom it in a little bit, and you can see what's going on here. We've had 1, 2, 3, 4, 5, 6 out of the last 7 days. If you want to count today, that's 7 out of the last 8 days. We've tested 1200 and not been able to get above it. So to me, that's really telling. So I'm giving a little bit of contradictory stories here. So Gold Fields is just kind of broken out. It looks like it might be able to get up a little bit higher, but the gold price, to me, starting to look like it's failing here. If we drop out the bottom of this range, I would say below 1190, then you can say that we've maybe failed that 1200 level officially. And if we get below 1180, then I think you can sell it with your life. Then I think gold could get a little bit ugly. We might see more of a correction in some of these gold shares. All right. We look at Bidvest here. We know I showed this one yesterday. I talked about how that bounce up that we saw at the end of the day, maybe we see it come back down to about $300. We didn't get quite to $300 yesterday, but we closed around 303. This is a massive level, and there's a couple negatives, real negatives that are kind of going on here between them not listing doing the one spinoff and IPO that I think was a disappointment to the market. Day before yesterday, we obviously got that negative trading update. this thing drops 300, I think it can really get hammered. So just watch this closely. Watch this around the 300 level. Obviously we're going to put some time in there. You would expect that we consolidate a little bit there. But if we drop 300 and can drop it by more than kind of 40, 50 cents, then I think that this thing is to be sold and sold with conviction. Right, and the last one that we're going to have a look at this morning is Coronation. Coronation yesterday came up and tested the previous all-time high. In fact, we got a little bit through it for just a moment. You can see that all-time high is right at 107. We got through it for a little bit, reversed off of it, came back close at 0650. This thing it really outperformed all the financials yesterday. I think if it gets above 107, then it's probably off to the races, and all the shorts have to be out. I've been on the wrong side of this thing, unfortunately, not for technical reasons, but for more fundamental reasons. But the share continues to trade incredibly well. So just watch this one closely. If it gets above 107, then I think it could potentially have new obviously, it could run. And if we fail at 107, then we might see a nice little correction here. So it's got quite a big inflection point for Coronation. And that's it for today, guys. Thanks a lot.